Now, with Remgro's shift towards unlisted investments and aim for an improved assets scarcity, results have shown mixed fortunes. Joining me now, to discuss the investment company's strategic shifts and challenges is Editor-at-Large for the Financial Mail, Marc Hassenfuss. Marc, always a pleasure. Good afternoon.
Nice to be here.
All right, Marc, let's talk about Remgro. It used to be the darling of the JSE. Is it still a darling of the JSE?
Look, Remgro, I've long said, has always been the share every South African should own. You know, personally, and I'm just talking about it in isolation now, it should give you, if you buy the share, exposure to pretty much a lot of South African business, from financial services, industry, healthcare, tech, you name it. So you're getting a basket of good assets that are well run, cash flow positive, normally generate good solid dividends, and you're not paying an excessive management fee. So if you bought a unit trust, for instance, would you get a better spread? I don't know. I think Remgro always, to me, has been a great share, one you should have and hold. And I just do believe at the moment they are suffering a little bit, and there's some serious questions being asked by the investment community. And remember, it has a long history, 7 decades almost. It hasn't really put too many mistakes on its portfolio. There have been setbacks here and there, but at the moment it looks a little bit different, and I think some people are quite worried.
Let's talk about that and what investors could be worried about here, because of course Remgro is a holdco, Marc, and we know that in South Africa, holding companies listed on the JSE have that unique challenge of that discount of what the share is trading off versus a net asset value.
Yeah, this is actually fascinating, because while I was writing the story, someone I was speaking to sent me an article in Financial Times, and it was talking about hedge funds buying out investment holdcos on the London Stock Exchange. The discounts that they're buying them at, which they seem to think are attractive, are between 7% and stretched to 19%. Now, I don't think there's one investment holdco on the JSE that's trading at a 19% discount. The discounts are wide. Remgro, back in the day when I kind of started in journalism, traditionally was a 15% discount. 20% was considered wide, 25% a dead buy. That discount was too wide. The discount's sitting at almost 50%. It's unheard of. 50% to me is a discount you apply to a company where you're seriously doubting the capital allocation, you're doubting the valuation, you're just doubting the chances of a value unlock. And it's just unheard of to apply something like that to Remgro. So you got to understand that the issues that they are facing now are pretty serious, and it's got people really, really worried.
And let's talk about that. Is it possible that investors are discounting it because they are indeed concerned about the valuation, considering that a lot of the assets are also unlisted at this point, Marc? But also, we've seen very big deals coming out of Remgro, which were actually exciting at the time of announcement.
Yeah, absolutely, they have. Now, so yeah, we got let's use this word kind of guardedly, litany of woes. So you go to the list. The first was Mediclinic. I think the El Noor deal they did a couple of years back to get the London listing is pretty costly. You could talk about the Swiss assets as well, were they too expensive. Yeah, so Mediclinic's got its own unique set of challenges. They seem to be coming right. It's going to be a slow process, I think. But then on top of that, you've got these other things that are happening. The amazing fiber optic assets they've got under CIVH. They were bringing Vodacom in as a strategic partner with a capital injection. Not unexpectedly, the competition authorities have stepped in and tripped them up. So that's deals kind of, delayed. I hope just delayed. I hope nothing more serious. But without the capital injection from Vodacom, there's an issue. They've already had to slow down the growth in that business, which is not good. It's a growth business. So the questions being asked at the investor presentation, is this really a growth business? Which is, I think, a valid concern at this point. And that it doesn't end there. The Heineken deal, which when they sold Distell to Heineken, already attracted complaints. People said you're selling it too cheaply. Turns out they've had to write down that investment heavily. It's very competitive trading. Their supply chain issues, you name it. It's faced a lot of headwinds, and that valuation has taken a serious write-down. So you've got those three things, and then Remgro also, unfortunately, bought back some of its shares at a price that's considerably higher than the current price. That's not too much big an issue, because that can just flatten out over time. But yes, there's enough for people to say, "Whoa, what's going on here?" This is normally if Remgro drops, you buy it. But now people are saying, "I'm a bit wary." And it's the first time in my life I've heard people say, "I'm not buying Remgro. I'm staying away." And to me, that's a big change.
So I must ask you, from your perspective here, Marc, what does Remgro need? A strategy shake-up, a leadership shake-up? What could possibly be what could fix it? And also considering that they've been very open about the fact that the operating environment has been super, super tough for them. And I'm wondering if that is also a reason for the challenges the company has seen.
I think you're quite right to ask that question. I think a lot of the people I spoke to, and you must remember, I speak to people off the record and things they tell me I can't write.
Yeah.
And the guys they want change. They're saying, listen, this thing's not working. Mr. Rupert, who's the controller general, needs to get in there and really shift things around. It's urgent. There needs to be a strategic review. I followed Remgro a long time, and I remember even with the Vodacom deal, there was a lot of criticism when they had Venfin going and they were never going to unlock value. Just lo and behold, suddenly they unlocked value. They sold it Vodafone, lots of value was unlocked in Venfin, etc. They get things right. You've got to be patient. I believe they've had a lot of bad luck. I mean, you've got to be frank about that. So I wouldn't say throw the baby out of the bathwater. I think the current leaderships, I think, are pretty good. But yes, they need luck. They need something to change. I think if they get one of these wins right, if they can get Medical to improve its margin, if the Heineken transaction can show its worth in the next 6 months, that it can make a bit of money, yes, it'll swing sentiment. Get the Vodacom deal through on the fiber optics, yes, that'll change sentiment. So I think at this point, it's a lot of bad luck, a lot of untoward things happening. So yes, it's going to sit on sentiment, and it perpetuates. Of course, we've got social media these days. People talk and get rather ugly. So I guess I'd be tempted to start nibbling at Remgro, but having said that, my gut also tells me wait till you see a sign of something improving.
Well, Marc, our viewers can read more in this week's Financial Mail. Thank you so much for your time today. It's been a pleasure having this conversation with you. That was Editor-at-Large for Financial Mail, Marc Hassenfuss.